The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to today's broadcast hosted by Nadex, analyzing potential opportunities in the Nadex markets. So, it's crazy that I'm saying this. I can't believe that we are already over halfway through July. It is July 21st. It's like I feel like we just started the summer like a week ago. Obviously, with COVID, yes, we kind of did just start it a few weeks ago, but man, it's July 22nd. So welcome back to this week's presentation. I'm very excited to have you guys on. Markets have been kind of crazy today. I don't know if you guys have looked at the charts yet today. Man, there's some crazy movements and stuff going on today. For a day that doesn't have a lot of news, they've started off and the media is going crazy. We've heard talk this morning already about stimulus by the end of next week, which again, kind of makes sense. And again, I'll show you guys that in just a second. So before we get in, for those of you that are new this week, welcome to the group. Let me tell you a little bit about who I am first so you guys understand kind of where my, for lack of a better word, my opinions come from. I do not have a secret crystal ball on my desk. I do not tell the future, but I have been trading since about the end of 2000, 2001 time frame. So I've seen the tech bubble, seen a couple different market crashes, started off like many of you out there, started off as a retail trader. Wanted to learn how to trade the markets, always had a passion for it. My dad and his father and his great-great-grandfather above him were not floor traders. My dad actually was a programmer for IBM, so it tells you that kind of I was the guy that took the different path. But started learning with stocks and options, realized very quickly what that market was about. Found foreign currencies and fell in love with that market, learned futures, decided I want to take myself to the next level, became a financial advisor, assuming that financial advisors and people on Wall Street were, they knew all the insides and outs of trading. Learned very fast that that wasn't necessarily the case. Left that realm, went out and decided that my passion was truly in teaching, and spent about 6-7 years traveling around the U.S. and Canada, not only doing seminars, but teaching people how to trade the markets. A lot of different backgrounds. So, I try to keep things as simple as possible. So when you guys are looking at my charts, you will realize that I do not have 8 million secret indicators on the charts. I keep things very simple. I am what's called a supply and demand trader. I read price action, not so much candlestick patterns itself. I know that is a very big discipline that people follow, but I do feel that a lot of that is still left up to interpretation. So I'm a supply and demand trader. I've created a number of different trading strategies, primarily for Nadex, but also in the currency market as well. You guys may have heard of the 30-minute trader or the high volatility trading course that I launched earlier this year, but also have a 5-minute binary course. Again, I am a huge believer in Nadex. I love some of the things that Nadex offers out there. One of my favorite things about Nadex, and again, every week, my goal is to give you guys one golden nugget, something that you can take away from today's presentation. And again, the one thing that I want to make sure that everybody's on the same page that they know about, I absolutely, without a doubt, love the limited risk entry that we have with Nadex. And today is a perfect example, and I'll show you in the NQ why I love Nadex so much. All right. With that being said, too, I am a very avid family man. I do not spend 18 hours a day in front of a computer staring at charts. I am a huge believer in technology. What do I mean by that? There's something that almost all brokerage software has called alerts. I love alerts because they tell me when to come back. I am an if this, then that trader. I'm not a where is it going to go next, because as I mentioned, I do not have a crystal ball. Nobody has a crystal ball on their desk, okay? But definitely a big family guy. Love coaching lacrosse. If you guys hear me suddenly grunt or groan, it's because I had 2 games last night, and at my age, I know I look really young in that picture, but early 40s, and I probably should not be playing a sport with 25-year-olds, but I did. And so if I grunt suddenly, guys, that's why. I'm a little pain today. And then again, boys have a lot of lacrosse this week, so it's going to be a fun week. All right, so with that being said, that's me. Let's dive into disclaimers so we're all on the same page as far as today. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost of enter the transaction, including fees. The information presented in this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And we'll talk about all 3 of those today. Now, Nadex is a registered trademark of the IG Group. I'm sure most of you knew that. All right, so Here's the agenda for today. Many of you have seen this before, but if not, first things first, we cover the upcoming news events for the week. A lot of stuff going on, not so much news, but media, and it's driving the markets right now. So we're going to cover that in. I'll pull that in 1 second. And then what we'll do is we'll go down and kind of do some analysis of the indices and see where they are. As I said, NQ trade today has been absolutely unreal, and I'll show you kind of how that one's setting up. Then we'll dive into Forex. Now, there's a lot of Forex movement today. As I said, I'll show you guys. You guys have seen me use that one scanner for a specific website. There is a lot of movement in the last 24 hours. So we'll dive into that, and then we will also cover commodities. Now, by commodities, I mean oil, gold, and then also I will touch on silver. Now, silver, it's something that not so many people trade these days, but silver is getting crazy. It's finally moved up on a chart, kind of where gold is, and there's actually people out there. It's not myself, but there are actually people out there that say that silver is going to $50. So I heard that this morning. I was like, it's an interesting assessment. Hadn't heard that one yet, and haven't fully dove into that one, but. Yeah, so some big numbers out there, right? And again, that gentleman is actually somebody I respect very well, so it's pretty interesting when I saw that. So let's go over to the upcoming news releases. First thing, let me just drag this in. You guys know I prefer Forex Factory just because we have the scanner function at the top. There are many different ones that we can use out there. Again, if Forex Factory is not your cup of tea, the second one that I use a lot is Daily FX. They also have kind of a similar breakdown of news releases, and I actually like their timing a little bit better. It kind of dives in. And I actually have both of them up my desk. This is just the one that I have the most because of the scanner function. Now, scanner up top, guys. Again, currency market, this is what I mean. Last week, we were rather flat, right? Not a whole lot of moves in the last 24 hours. Look at this. This is some crazy stuff right here, right? Again, Aussie dollar 106 move in 24 hours. That's a lot, right? We're seeing weakness with the dollar across the board. Look at this. Euro dollar 54, down 84 here. Down 36 versus the yen, down 52 against the Swiss, down 93 versus the CAD. That's a huge move. When we had Canadian data today, that was bad. Aussie dollar, bam, up 106, euro pound, and then euro yen. You can see these are a little bit of pound story, but again, a little bit of euro weakness in there as well. But even the euro weakness over here, it's not nearly as weak as what the dollar was today. So as far as the news releases that we have to watch out for the week, obviously this morning was a big one with retail sales for the CAD. And again, they missed, right? They missed, but you're seeing the dollar-CAD currency pair getting a whole lot of CAD strength in here, even though there was a big miss. Again, the dollar tends to trump everything, right? As far as kind of the importance of dollar news. But again, this is very bad for, this is not great data whatsoever for CAD. Now, the rest of the week, again, somewhat on the slimmer side, right? Tomorrow we have CPI for the CAD month over month, and crude oil inventories is going to be the big boy tomorrow. As you guys, if you guys saw it, last week, the inventory was down 7.5 million barrels, right? That's a lot. That's a big miss last week. Now, this week it's supposed to be down 1.3. Interesting question, and we've talked about this the last few weeks, is with states starting to close back down again, will we see a sudden hit over here in oil, right? Will we start seeing a hit in oil? Or will the producers try to get ahead of this one this time and be able to kind of turn the switches and stop the flow before the inventories get too bad to help stabilize the price? And that's really it for Wednesday, right? And then Thursday, we do have the unemployment claims number and then the CB leading index. Not as worried about the CB leading index month over month number. I'm more interested in the unemployment claim this week. And here's why. Last week was a little bit early. We really couldn't see it. We saw the previous was 1.3, and this week it is also supposed to be 1.3. But what closed down last week? Okay. Florida started closing things last week. California started closing things down, and Texas also started closing some things down last week. I did hear and did read that Chicago was also starting to close things down. So because there is a week delay in this, we may start seeing an uptick in this unemployment claim number. What does that mean for us in the markets? Well, I'll tell you right now. If we start seeing this unemployment claim number ticking higher, the media is absolutely, without a doubt, going to lock onto that and grab onto it and start dumping this news out there, and that'll be the main focus. We will probably continue to see an index decline, right? We will probably see the overall indices continue to push lower, right? Why? Because all this negativity about how the market's getting worse, we're going back and it's going to get worse. Things are closing, second wave, what's happening next? Could be bad, all right? Friday, we got a lot of news. Now, a lot of it is very early morning. It is European-based news. European-based news has been kind of a big focus this week. I don't know if you guys follow this or not. I mentioned it last week that we had the right here. We had the right here, the EU Economic Summit, right? Now, originally we thought it may be one day. It dumped into day 2, then it had to go to day 3, and even jumped into day 4. Okay. Now, again, you may not necessarily care about EU economic politics, but depending on the stimulus package that they put in, that will dictate a response from our Fed. Why? Because if the stimulus is so good for businesses in Europe and it stands to put us at a disadvantage, well, guess what happens? Okay, guess what happens? That will all of a sudden put us at a disadvantage and we will have to make some changes quickly. So there is a response that needs to come back either way. All right. So, all right. Friday morning, obviously going to be a big deal. 3:15, 3:30, 4 o'clock. And again, it's kind of broken down into 2 different areas, right? We obviously have the European numbers right here, these 3. And again, earlier this week, we heard rumblings from Italy and Greece having issues again, kind of going back to the, quote, the pigs, right? Portugal, Italy, Greece, and Spain. Then we have the pound numbers. And again, the pound has been pretty interesting to trade lately. And then followed by U.S. numbers right here, okay? And we'll see if, how it ends on Friday. So a lot of this, guys, this week has been driven by a couple different things. Obviously, the EU Economic Summit. And again, we can drop down into the news section, right? But here's the big thing, right? Munchin says goal is to have stimulus deal by the end of next week. Why next week? Well, the end of next week is when the CARES Act stops giving the plus $600 on the unemployment money, okay? That's kind of a big deal. With states closing back down again, more people will be getting back on, and if they don't have that additional 600, that could really put everybody in a big bind, right? Could put people in a big bind. So that's something to watch out for. There is some good news in here. Again, Florida cases only rose 2.6 versus 3.5 the previous 7 days, so that's good. This is also a big run here. The UK seeks a win-win trade deal with the US. I assume we will hear about this one very, very soon. And again, Johnson, he was getting a lot of flack last week that we didn't have trade deals, that they were unable to come to any type of system. This is something that I've been kind of following most of the summer. I knew once the whole Brexit thing was happening, they were really going to go aggressive and try to get some rock-solid trade deals out there with other countries. Obviously, the UK and the US is definitely one that is pretty important for the UK. Right? So we knew that that was coming. And the most part, again, the EU compromise was a positive step for recovery, but it's inadequate for long term, right? So that's kind of one of those things that's like, yeah, we did something, we came to an agreement, but is it inadequate? So that's kind of some interesting news. And this is kind of what we're seeing, right? Possible, lower cash rate by 10 in, Australia. The UK is talking about this. Chinese foreign government reserves the right for further action against the UK. So again, China is not just against the U.S. It's it's basically going against everybody at this point. And again, we can see some stuff up here about is the U.S.-China rivalry partnership possible? All right. So a lot of, again, this is all media-based, right? All media-based, not so much economic release. So it will tend to have a lot more feelings, thoughts, opinions, fear, and greed associated with it. And that's why we're seeing the big swings back in the market. All right. So that's kind of a week at a glance. Let's dive into the charts and see kind of what do we have going on. All right. So let's start over here with the NQ. All right. Now, one thing, guys, I just want to make sure that I give this information. The system that I'm using right here is, again, it is MT4. I get asked about it. This is ECN-based data. So the ECN-based data, the numbers are slightly different. Just make sure for any of the areas that I'm marking off or talking about, I have them move slightly off of that area for a reason, so it is more closer to what the actual price is. But just make sure you do the charting that I'm doing on your software at home as well to make sure the numbers match exactly. Right? I don't want anybody to get in a position saying, oh, well, you said it was this number, but it was higher. Make sure it matches your chart. All brokerages have a little bit different price data, and this is no different. Again, this is ECN-based data, so it's slightly off. But you can see the NQ. We were up here at all-time highs, and again, the last time price hit this level, we had a huge, huge move to the downside, right? This little yellow dot is where we were last time. And if you guys remember from last week, I said, hey, if we can get back up into that area, we got to be looking for additional shorts, right? Again, this is that whole kind of parabolic move. One large extended range bodied candle. And again, those are great retracement targets when they find a bottom. And again, it did find the bottom, right? We had that kind of spike up and down for news last week, right? And then since that time, last week, it kind of went over, and then bam, it went straight up and now is retracing. So it's been kind of like a double retracement, but this is what we're looking at right now. We've seen price this morning, literally over the last 3 hours, just absolutely collapse, okay? Now, this is why I personally like to keep things very, very simple, okay? I don't have a crystal ball, and this is why I'm an if this, then that trader. The last time that price was up in this level, it got hammered down, meaning, again, this is not an assumption, I know that there were sellers sitting in this area. Why? Because if there wasn't, price would have never went back down again, and it's an area that I'm looking for price to hit, and it did. It came up, it based in there, like, wait a second, we were in a heck of a rally, all of a sudden it stopped. It stopped. Why did it stop? Why didn't price go higher? Well, that's called supply. Sellers stepped into the market. People basically said, if price got up here, I'm willing to sell it again. And look what the end result was. Bam, a big move in price, okay? Now we got to think where we are in price now, right? What can happen next? Well, a couple things, all right? If I drop it down to a 30-minute, gives us a little bit better of a view of kind of this area. Now, again, markets are typically, they will move in two directions, right? And impulse correction, impulse correction. So we've seen a couple more wicks here. We've seen pulling back, meaning that it's grabbing the buyers over here in this level of basing, right? Came up in base, went up in base, went up and kind of slowed in base and popped. And we're kind of stuck in this area right here. The next place, again, there are a couple of orders sitting right in this level right here. So again, if you are short, you got to start thinking about, hey, listen, I may need to take some, profits in this area or directly right below it. Again, we saw price kind of go back down, try to grab some more seller, try to find some more buyers, and then pop again. But if we can break these two, it looks like price has the ability to come all the way back down to this level, right? The 10,676. So for right now, again, you got to think about what time of day we are. It's about 12 o'clock right now. We got to say, hey, listen, where can things turn? Where are the next opportunities in this one? And again, getting this grander picture, you can see we got two little speed bumps on the way down, and then we got an area here. It definitely had some problems, a little spike down, but a big punch up at 106.76. Again, at the end of lunchtime, we'll see if this is a continued push to the downside. All of this is really, again, this is not economic news releases. This is talk of stimulus, and again, whenever you hear stimulus, it means, oh, the economy's not good. We talk about it dropping back down again, right? There being major problems, okay? And we don't know what that's going to look like. Now, whenever anybody mentions the S word, the stimulus word, that also means we gotta start thinking about inflation and everything else, right? So again, there should be, as we have the details of the stimulus come online, there should be a lot more movement going on in this position, okay? So right now, again, if you're not already short, again, that was a short level that we had talked about last week. Right now, and again, I can move this forward. Again, I always like to try to, my goal is to kind of keep this so we can kind of track it each week and follow it, right? That's where we are right now in that little area, okay? So is that area up there at 11,035 still good? It's probably good for one more hit. It did spend a lot of time up there. Like I said, it spent about 6-7 hours up there. But it has held twice. So when we get up there, and again, if you guys remember in the the disclosure in the beginning, or disclaimer in the beginning, I mentioned one of the things that I like about Nadex so much is that we can get into positions, and the most we can lose on that position is what it costs us to get in, including fees. Okay, things like this are awesome. Okay. Am I right? Is it guaranteed to stop and turn here? Absolutely not. But what I'm able to do is take very, very low risk, knowing that there was huge movement the last time the price was able to rally up to there, and then look at this drop. Okay, this is ideal conditions for things like knockouts and binaries, because you can keep that risk level very, very low, particularly when you're using them, obviously for a knockout at the ceiling. But you can take something a little bit farther out of the money in this one, and look at this drop. I mean, this is a huge drop in 3 hours. Huge. And again, looking at your news for the day, was there any was there an economic news release that came out? Was there really even a headline? Not really. There's a lot of small headlines, but man, look at that. Huge move. All right. So right now I'd be looking for the 11,035, and I'd be looking at the 106.76 as areas of kind of tops and bottoms in this one. And we're kind of sitting in no man's land in the beginning. But again, look for these two little bounces. Those are probably the best two little opportunities right now as far as slowing this down and potential kind of pops to the top side. Now looking at the S&P. Now the S&P has finally finally burst through a level up here. Now, we've been talking about this level. It's kind of been front run a few different times. We knew it was going to have some problems. It doesn't have the biggest set. Now, this is the 4 hour. Now, on the 1 hour, right, on the 1 hour, I still had that zone up there, but you'll see this one, again, it came up into that zone and has been kind of basing sideways. It was having a much harder time getting that full ascent. It was unable to climb the cliff, and it kind of bounced over. And again, we still have down on this one, but the down was not as huge. And again, it's because this old area that it needed to kind of punch its way through, again, it was a little bit different. Remember, the other one kind of stopped based and then ran out of buyers and fell. This one was able to punch through. So this same area of sellers has now become an area of buyers. And again, it's starting to hold this one up. So getting a bigger picture of this one, we can see we really, again, we have nothing but down. So really numbers that I'm looking for on this one, and I'm going to take these two off right now just to clean the chart to make it a little easier for you guys to see. Okay. For me, 33.59 is kind of an area. It's where price was before this entire collapse came down again. We're kind of within striking distance of it. You can see that it's kind of floating up there. I'd like this one to get a kind of a nice little kick higher, right? And we have our big impulse move and a correction. So for me, I can remove this, take that one off. There we go. So that's what I'm looking for. A push up to get a really nice short, something big on there. But at this point, it looks like it is starting to kind of roll back over again. Not to the same extent as the NQ, but it does have a level of basing right below. So that'll be a big question. That level of basing is sitting right in here. So if we do get a break of this level, we do have kind of a bit more to run to the downside. With it being already 12:20 in the afternoon, I don't know if we'll get as much. And again, we got to worry about that end of day rally that has been quite popular lately. But areas from the downside where I would be looking for longs in this one, at least in the near term, is this 31.97. Okay, so let me go back. So 714, right? 714.12 right here is where we were last week. Right. Make sure I have the right one. Yeah, 714.12 right here. Let's put this over there. That's where we were last week. Okay, so this level, this little gap here was not in at that time, but you know what? Let me remove this, make it a little easier for you guys. This could be another one of those golden lessons for you guys today, okay? Gap areas are typically telltale signs that there was an imbalance in price, right? As you can see, this 31.97, literally it touched here, bounced, came all the way through here, bounced again, came over here again and bounced again. This has been a big area of buyers stepping into the market. That is an area that we definitely want to watch out for. And again, we have a new demand level, this area right here, this green, of an area of buyers. So this is another one. So for me right now, I have 33.59 on the top and 31.97 on the bottom as two areas that I'm looking for. What I would do with either of these areas, depending on when we hit them, because again, we will hit one of these two, look to see what's happening. Look to see if there's news coming out. Let's see if there's a US Open or a 1030 reversal. And then what I would do is I would recommend going in there, checking out the binaries and the knockouts on this one, because obviously this is a knockout-based pair as well. See if we are near a floor or a ceiling at that time. Okay, as we go up and down, obviously we will be breaking knockouts top and bottom. So we want to see if we can get one very, very close in proximity to price, as well as obviously the binaries change each day. But that could give us a great opportunity for shorts as well as long. But 31.59 and 31.97. Now the Dow. The Dow's got some craziness. Now, the Dow, again, we had that same type of gap that I talked about. Here's where we were last week for our Nadex presentation, right here, kind of hidden behind the H, this little yellow mark here. And you can see the same thing. This one kind of got front run, but kind of stabilized. Now, this is a level I've left on, even though it's finally broken, as well as the level over here. So these have been two levels that really price has kind of been kind of a magnet towards, right? I mean, here we went above, below. Again, same thing here. We just keep pulling back, and not only was it a sell, but then it was a stabilization point and a bounce point. So for me, what I'm looking for is getting some type of a short entry in the Dow. I'd like for it to go a bit higher. I'd like for it to come up. I mean, ideally, I'd love to go to the 27.5, 501, but I don't know if we're going to get that high. But if we can get up here into the 27.105, I do think there's a short there, and a profit target for me would be down here at the 26.735. Why? Because, again, price has been so attracted to this area. Again, stabilizing, and if I move this back, I can continue here. And you can see what happened. It bounced off that level, bounced off that level, bounced off the level, went just below, came up. And, again, you guys see how it keeps – if I take an average, this level right here is like the average area of price. Again, above, below, above, below, below, back in, and get sucked back in, down, pulled right back up. Came over, stabilized, and again, it pulls back up. So I'm looking for price to come back down to 26,735. And again, this is kind of looking behind the scenes, but looking for entries at 27.10. I'm sorry, 27.105, and again, probably entries if we're able to break through there at either 26.552 or maybe potentially the 26.735. But that's basically a profit target for the downside for me. All right, so jumping across the currencies. So yeah, currency movement a lot. Okay, and there's an easy reason why that this chart looks like this. So that we had a zone up here, and this just got blown through. Okay, all this right here is for one reason. Okay, this is huge movement, right? This is huge movement. This is over 100 pips in the last, 10 hours? Okay, this one is an ATR of 58. So in one day, in 24 hours, the average move is 58 pips, okay? In 8 hours, we've moved over 100. The reason why is that S word that I mentioned, stimulus. Stimulus. Stimulus means printing more money. Okay, for those who don't know, stimulus means printing more money because they just don't have stacks of money that they're like, yeah, it's already printable, just leave it here. No, they're going to make more, right? Whenever you read, again, in this economic time with COVID-19 and everything going on, stimulus means sending money out to people, checks, right? Well, that's going to jack up inflation. That's also going to, that's also going to mess with gold, and it's going to make gold prices go higher. Which, again, for those of you that don't know, gold, the Aussie dollar is a proxy for gold. Okay. Aussie was also in the news. Obviously, they're talking about, potentially lowering an interest rate, making things more favorable for that country. So there's a lot of different things. Typically, again, when you lower the interest rate, there's not as much kind of, I guess, demand to put your money in that currency. But the dollar being where it is, mentioning stimulus, the fact that we need more stimulus is just showing our overall weakness, which, again, is leading to the Aussie dollar just rallying. Going crazy, right? So here's where this one gets interesting. On a daily level, we don't have any zones until up in that range. Okay, so first time we have a daily level is up here at 71.78. Okay, you guys can see it's just above where we are, which also sets us up for a pretty interesting opportunity. Okay, we need to move about 55, 60 pips to get to that level. Okay, it could potentially do it the rest of today. Now, with as much and as fast as this is exploding, this also gives us an interesting opportunity because, again, this is basically a parabolic move, right? I mean, on the 4 hour, this is 3 candles straight up. We don't really see that anywhere else. There's always pullbacks. Whenever we have a move this fast with no pullbacks, we tend to get a retracement on there. And the big question is, where do we get in? Where is the best opportunity? How do we stack the odds in our favor? That's 71.78. We've already been shown again that, hey, listen, we got some sellers up in that area. The last time that price was over here, again, we had a nice push off. And again, it started over here. Again, there was a clean push here, clean push. But look at this. That was a 6-day push to the downside. So we know that sellers have stepped into that area before in the past. Ideally, this top one is a little bit better. We know the one right above it is a little bit better. So, 71.78 could be our entry, but it looks like 72.50 would actually be even better. So what I would do is I would keep both those. Here, let me zoom just a little bit so you guys can get a little bit better review of it. Right there. What I would do is I'd be looking for either of those two areas, 71.72 or 72.53, depending on when time hits. Again, if we have a news release, a U.S. market open, a U.S. market close, any of those could be great opportunities for this one to retrace back on itself after just absolutely huge moves, right? That's how the market works. It will kind of push back. Now, are we at risk on this one if they mention more about stimulus? The answer is maybe, but the market knows now that the stimulus is coming. So the market has basically priced this one in, to some extent already. So that's, again, this is why I went back and I mentioned it in the beginning and I mentioned it on the NQ. We're looking for areas where there's a kind of a high probability of a turn. Well, the best way to play those is with an absolute limited risk or low risk entry that can't go against us any more than what we got in. Okay, so again, binaries, or again, in this case, call spreads, they're ideal for this situation. Okay, they're absolutely ideal. So again, it's a little bit of timing, a little bit of kind of chart analysis, but again, great potential opportunities in this one, particularly for the Aussie. All right, and again, if you guys are not necessarily Forex traders and you want to start trying it out, Aussie dollar is a great one to start learning on because you have movement in the morning, again, because of the dollar, and at night because of the Aussie. So it kind of gives you a 24-hour trading vehicle that, again, you can have very low risk on. All right, now looking at the Aussie Yen, same situation. Look at this. Now, this is not versus the dollar, it's versus the yen. The same punch, although this one is a little bit closer, and you see that it's already starting to have some problems. It's already starting to run into some areas here. So on a 4-hour basis, you can see not too much there, but looking to the left, you see this gray line. There's definitely some, some push in here. And again, this is a level that we had talked about last week. We gave a little bit of warning about that level. You guys can see the dot right here. The warning was, hey, we've already pushed pretty deep into this level. If there's nothing going on, again, there could be some opportunity here for some shorts, but we had so much basing, so little movement. Again, any talk of stimulus is definitely a big deal, and that's what kind of jacked the Aussie, but right through that level. So again, was it a high quality turning level? No, not so much. But again, this one up top, I think, is a much better level. Definitely something I'm keeping on my personal radar, the 76.40 area, and even dropping it down to an hourly, right? You can see we have some levels coming in. There's a smaller one here. Let's go look at that one real fast. Let's see. Not a bad level. So this one here is not bad. 76.10 again. Nice push off. Really large extended range body candle. Definitely a lot of bears in that one. And again, that continued to push down base through that zone that we had marked off. There is a little level here as well, but I think where I'm going to put my alerts is 76.13, as well as having another one up here around the 76.50. This one kind of pushed down, made an attempt to kind of retrace and base below it, and then pushed down and has not been back. So again, there could be another great kind of binary / call spread position up here at 76.50. All right. All right, so that's that guy. Let's go across the euro yen. So euro yen, you'll see it does not have the same explosion. Why? Because again, it's the euro, not the Aussie. Now, we've had some, this level's been an area that we had marked off. We kind of pushed through, and again, it's already traded. It's already passed. We were sitting over here last time, and we mentioned that we were inside of this kind of large 4-hour zone, and you can see how this 4-hour zone reacted. It kind of went down, pushed back, went down, pushed back, kind of failure to go higher. Again, there was a trade set up right here that continued to push much, much lower. Came back to that same level again, pushed back through, came again and went through. And again, guys, look, there's your 1 peak, there's your 2 peaks, there's your 3 peaks, and number 4 is what finally broke. And then what it did is it flipped on us. The same area of sellers became buyers. What did it do? Again, we could start here where it pushed down. Came back, pushed down again. Came over, pushed back into that same zone again, and then pushed higher. So at this point, let's see. Let's go up to a 4-hour. You can see that a lot of these short-term trades, again, they've already triggered, they've already hit profit targets. Actually, let me drop it, delete that one real quick. I can remove this one. You guys didn't see this one last week. This is for my guys, but again, there was an entry here. So 21.93 is still a valid level down here for longs. I liked how this one kind of bounced off. I like that we had a nice push, a retest, and a pop, and then we touched it and blew off of it. So upside 21.94 would be a good area. I don't need, I'll take this one off just so we have, just so we have a little bit better view on the larger time frame. And this zone, I'm going to leave it, but we're not going to be trading off of that one. So, let's see. We do have a little wick over wick. Let's see. Let me check this one out. This could be a nice little hidden zone here too. Yeah, it's not bad. All right, so let's see. So 2 intraday targets on this one, or 2 intraday potential entries anyway, would be one around here, 123.73. Oops, not that. I'm hosting all kinds of stuff now. And 124.25. So those would be 2 little areas here. Again, obviously we need a little bit more euro strength. It's been slow to come in. Hopefully we will bounce through this line and give us a little, one of those little Harry Potter trades, a little continuation pattern to the top side. But 123.73, 124.25 would be 2 nice areas. Again, the timing of those matters. Again, looking for or the news releases. Again, this could be maybe a tomorrow or maybe even a Thursday trade setup with all the news we have coming in for the euro. But taking one of these shorts again, intraday, probably with binaries is what I would use for the euro again at this point. Okay. All right, let's go across to the pound. So the pound, you guys can see on the hourly, has been just literally chopping sideways. We've had a bunch of movement in the last 24 hours. This one, let's see. In the last 24 hours, the pound yen has moved 43. So it's definitely well within its daily ATR. The daily ATR of this one is 93. what we're seeing is kind of stuck now, right? We pushed up. We're kind of in an area where sellers have stepped in, and it looks like that's the case again, that sellers have been, kind of stepping into this one. Obviously, talks of a trade deal or anything with the U.S. is, actually this week, I mean, really since Sunday, this one had a lot of strength coming back up, and a lot of this has to do with the EU Economic Summit. Seeing the weakness over there has kind of empowered the pound traders. We were all the way down here, and I mentioned this 133.91 level. So this is where we were last week, guys. And price did come back down, and again, this is what I'm talking about. This was a tested level. We tagged it, and we took off, and we've been kind of moving from there. So right now, it looks like shorts up at 137.25 would be good. Oops, nope, I want to move it. I don't want to stretch it. There we go. All right. Any longs, I would say we got to be. There's not a lot in this area where I'd be willing to kind of jump into something and say, hey, listen, I'm willing to go long. So we kind of need some help from the pound right now. This pair can move, so I mean, this could be literally just one day away. But we need about 100 pips up or about 150 down for this one to move. Let me actually drop down a little bit lower. Yeah, even on the 30-minute, there's kind of an opportunity there, but being in the middle of the zone, it's kind of one of those ones that I don't really love too much in this one. Again, whenever anything gets really, really choppy like this, particularly a volatile pair like the pound yen, it's kind of one of those ones. It's like, listen, it's better to have patience in this one. I mean, we have trade opportunities in the indices as well as the Aussies. Something like this in kind of the middle of range, even on the 30 minutes, without any clear, there's really no extended range candles in here at all. There's really just not much going on. It's probably better to be patient, particularly this late July. So again, 137.25, 134.25 are both areas that I'm looking for, but we need a little bit of help from the pound. It needs to kind of go up or down to get us into those better quality zones. Okay. Now, pound dollar has been a monster, and again, this is up 89 pips in the last 24 hours. The reason why? Very simple. Dollar weakness. Now, this is that trade setup that we talk about all the time. Here's one of those Harry Potter trades, guys. You can see that this was a level we were looking for. It was a smaller time frame short position, and again, this yellow line was kind of was an alert to say, hey, listen, what's going to happen when price comes here? And you can see this one really kind of it based below. It gave us kind of the alert / entry, but it based, and it didn't go anywhere. So when you see those type of things, and again, it kind of pushed above and went below, this is typically a telltale sign that it wants to grind through a level. Well, after the grind through the level, what do we look for? Okay, here's that Harry Potter trade, guys. What is a Harry Potter? It is a momentum breakout trade. There is your momentum breakout trade to the top side. We punched through, we got our white space, we pulled back, we got our entry, it came across, it gave us a second entry, and then just tag our 1 to 3 profit target. Okay, so a couple different entries in this one, and this is an example of how when you're doing your analysis, you have to be a little bit more willing to kind of look at things and say, okay, what's happening? What do I see in price action? And in this case, what do we see? It based before the level, it hit the level, and then kind of dropped and based again, and then made another push up, showing us that, hey, they're buyers here. So you can either take the small loss, get out at a very, very tiny loss, because again, it really was riding along the entry, so no reason to lose any money on that one. Kind of pushed back and even actually went into profit a little bit. But again, once it punched through, we knew this level is not worth an entry. So you could have got out with maybe just a little bit or even a break even. But when we came through the top, you got to be thinking momentum, right? What is the trend? Well, the trend since yesterday, right? Since yesterday I guess since this morning, right? Actually, yesterday, all day yesterday, and then continuing today. So this was actually at midnight, right? Midnight Eastern is when this trend started. Really, I guess it started kicking up at about the open, but 12, 1 o'clock is where the bottom of this one was. So we have been in a near-term uptrend. And again, in the uptrend, we're getting a little bit high. We typically don't want to buy in an uptrend. It gave us kind of a pullback, never gave us a confirmation entry, went through the top. And again, maybe you got in here, but again, that's not really white space for the Harry Potter. This is what you're looking for, guys. You want that space. You want the clearance. You want the pullback. There's your test. And again, you got 1, 2, pow, 1 to 3. Okay, so where we are now, what can happen next? Would I use that same level? And again, that level is kicking in over here at 126.75. The answer is probably, right? I mean, both times that prices touched that area, boom, it popped off of it, came down, and boom, popped off of it. Nice move. So 126.74 on the downside is something that I'm looking for. As well as you can see, we're getting up into some zones up top. They're not showing up because it's been a little bit of time here. Actually, let's go back to the hourly. Let's put an overlay on so I can see where that zone is. Ooh, look at that. That's right where the stoppage was. It stopped right at the start of that zone. So again, it looks like the 1 to 5 would have been a bit harder to get into. Oh, this is that funky candle. Yeah. All right, so this one's going to be harder to grab, guys. This one's going to be harder to find a short target in because, again, we have this candle that literally spiked up and down. Huge extended range candle. It's about 92 pips, but the open and close were like literally right on top of each other. So a little bit harder of an opportunity to get into this one. What I would do is I'd probably wait for a failure to go higher somewhere in this area. Again, I wanted to drive farther. I wanted to get into this zone. It's got to show me, again, give me that telltale sign. But again, profit target-wise, the 1 to 3 was the way to go on this one. You wanted to make sure that you were out before this 4 hour where you can see this dotted line, and that was the key this morning. So again, your 1 to 3 was the target this morning. Right now I'd wait for a failure to go higher, but I do think this one is going to turn and flip in the next 24 hours and push back down again. But it's going to have to be one of those ones that you kind of watch. It's something like this where we get a turn and a push. This potentially could be it. This could potentially be it. But again, it's going to have to come down a little bit farther on this one to be able to catch an entry on the downside. All right, so let me move the yellow circle across just so we can keep track of that one and follow through. So euro pound. Euro pound has been moving nicely. You guys can see that there was obviously a 4 hour level up here, and that's what we turned off of. Right now for this one, unfortunately, we're kind of smack in the middle, and this one has had some very boring kind of movement. Again, it just sucked in a little bit of movement, nice drop, base kind of, and we're pulling back up to this 90.44. I mentioned this for my students. For me, I'm kind of waiting top or bottom. I think that the euro pound or anything really in the last 24 hours has been a little bit risky with the euro. Why? Because we knew that EU economic stimulus was coming. We knew that they were going to come out with something and didn't quite know what it is. And you got to ask yourself, because there's something as big as a pandemic stimulus for the euro, what could the response be inside of the markets? And if the answer is I don't know, you don't trade it. So again, I've been kind of watching this one and kind of waiting to hear what's going to happen. And again, 91.42 and 89.49 have been the two areas that I'm waiting for, with price currently over here at 90.31. We got a little bit of room to run. And last week we talked about here's the yellow dot. We talked about here would be the first hiccup, right? Here would be the first hiccup. This pink line. Well, here I'll extend this across. I'm not going to mess with the top of it. What happened? Price hit the hiccup, hit the hiccup, hit the hiccup, and finally punched through. Then used the hiccup to push farther down. And what did it do? I'll extend this one and I'll leave this one on, and there's the same area, and we hit the second hiccup. Okay, so these little hiccups or speed bumps or whatever to the downside have kind of made this one a bit interesting. And again, the EU economic stimulus is obviously a big deal. The response is back to it. The kind of day or two of media analysts or financial analysts talking about whether it was good, whether it's bad, whether it's going to fail, who's happy, who's not, will obviously be a big player in this one for the euro pound for me. So again, I'm trading this one at the most conservative aspect. 91.42, 89, 49 to the downside are things that I'm watching. All right. Oops, let me move this thing over there. All right. So next, euro dollar. Euro dollar has been also a monster. Okay. Here's where we were last week, and for my guys, I drew an area over here. I say, hey, listen, we got shorts at 114.45, but we have a racetrack sitting above. There's an area here where we may be able to overtake. Well, that's exactly what happened this morning. And again, a lot of this has to do with stimulus, right? Whenever you hear stimulus, that's what we got to focus on. Now, here's an area that we said we got to keep track of. Price, again, it's in yellow. I'm sorry, it's in white. We had basing, we pulled back, we touched it, bam, there's our first drop. Okay. It rode along here so much, you can see that it is also becoming an area of interest, okay? I don't use that terminology too much, although we're seeing it a lot more often recently. Area of interest, and again, it's kind of acting as a price magnet for the top side and the bottom side. What do we have? Price came here, dropped, came back up, rode, dropped, came over, went right above, dropped again, rode in here again, went a little bit up, dropped, went a little bit below, dropped right back in again. So although this is not an area we want to trade off of anymore, it is absolutely an area that we have to respect for a target, okay? So I'm going to move this across and say, listen, anything that we get short, 114.50 needs to be an area. And again, I get asked this all the time. How do I pick my targets? I get out too soon. I don't hold them long enough. That's what we got to watch out for. So drop into a larger time frame, right? We got to see where is their potential entry. Now, as you can see, it looks like on a 4 hour, we don't have much slowing us down. And again, that's why we drew this area for kind of a breakout to the top side. We don't have a very clean entry until 115.64. Okay, 116.54 is the zone that we're looking for. Now let's go back and look at what that area looked like. And I can't even see it over here. Let me see. Let me go forward. I know that it's up on a daily, so let's punch a daily to get a better view. Let's look at this zone. You know what? Hold on. Hold on. I need to adjust that. Click this. All right. Let's see. So, ooh, that's interesting. All right. So we do have an area that we are just approaching right now. You guys can see that the last time price was here, it pushed up. It's kind of a front run of this other zone here, but again, it did end up pushing down, basing, and dropping through it. So it's interesting. There's an area here and an area right above. And again, I'll throw these two lines on here. Now let's change these to purple, something different that we don't have, so that way we can kind of look at them on the lower time frames. Drop it to a 4. Let's go all the way across. There we go. So we are approaching one now, and we have one coming up at 115.64-ish. Because it is 12:45 at this point, I don't know, I may be a little bit more leery taking this, but I do like this 115.64. That was the better of the two zones to be able to trade off of. And again, large spike up, we tend to have retraces. So again, this may be another opportunity for not only a knockout, but also a call spread or a binary off those levels. Now, if we get a little bit of slowing, which I think we'll probably do because it's the afternoon, when I say slowing, I don't mean a halt in trend. I mean the candles, the body starting to get a bit smaller because, again, the European traders are out of the market now. If we can get a push up, whether towards the end of the day or, again, maybe even timed correctly for a European open, what I would do is around 115.64, I'd be looking for either a failure to go higher or coincide that with a European open when European traders step back in. It's a big day up, and again, the euro is getting more expensive, which hurts them as far as exports go. But anything that is emotional move this way, you tend to see a retrace, and we need a top. And again, the 115.64 could be that area for me. All right. Now, CAD is absolutely just falling through the floor. All right. We were over here, and we put this line on saying, hey, listen, if we get a break below, this could be a nice little entry. I had drawn a racetrack for my students and saying, hey, listen, if we get into here, this is where we want to get in. As you can see in the last, 24 hours, this guy's down 91 pips. And that's even with absolutely horrible news for the CAD today. Again, this is a dollar weakness story, and we are continuing to push lower. So where do we trade it right now? For me, I'm looking at 4-hour levels a bit lower. Couple areas on the top side that we could probably get in, but I think, let's see, let me drop this to an hourly and see what we have. Ooh, an hourly, nothing is showing to the downside. That's kind of interesting. So it's been a minute since price was down here. So let me mark off that area, and let me see if I can go back and find that on the hourly. It's not a zone that we can really do much with. Let's see, how much risk do we have? There's about 60 pips risk. I do not like that. That's a bit much. Let me trick this a little bit. I was hoping that this would be a smaller level, make this blue so it's easier to find on the 30-minute. Oof. The way that one is drawn, it looks like at best it can be a 54 pip zone. So this was obviously a news-based spike because of the size of it. All right, so this one's going to be a bit more challenging to be able to get into. So it looks like right now, best bet is going to be 133.66. This is one, and again, this is drawn on a 4-hour zone. Even on the lower time frames, though, it is huge because it was created around news. This is one that, again, if price gets back down to this level, which, again, it probably will do, we'll probably continue the trend today. It's looking for a zone to flip off of. There's a chance, and I say there's a chance, it could flip around this 133.96 range, but I do think it will probably push a bit lower before retracing, just based off what we've seen today. I would urge caution with this one. Again, the risk on it is larger. It can turn anywhere inside of that zone. Probably more of a binary trade setup. But again, any talk of stimulus is really going to affect this one. So this may be another one of those ones, guys, kind of like the pound yen, that, again, you may want to take a little bit of a breather on this one and skip this one until we really get some clean levels, and then drop out down to a 30-minute and look for some large extended duration candles to be able to take those trades out of. Again, this was an easy one. This was kind of a racetrack move to the downside. We'd had so much stabilization across this little tiny level sitting right here that, again, any type of break below, we're looking to take it over. And again, that was what the trade was in the 30-minute. Right now, and there's an intraday target, intraday entry here, but besides that one, dollar CAD has got a little bit too much risk, I think, for anything based off of Nadex. All right, so dollar yen. Dollar yen is now crashing into a zone that we weren't able to kind of see last week. We were sitting right here. I will drag this one. Whoops, I'll make it small. Drag it forward. I'm going to bring it right here. So we're in a zone right now at 106.74. Again, it is 1 o'clock. U.S. traders will be coming back online. I do feel like today is just going to continue to end in a negative. Although we are in a zone right now, I just don't feel that this is necessarily the best of entries. Again, it is a zone that's been tested, but as you guys can see right here, this piece right here, it tested it all the way down to this level. So very, very low kind of push down tends to be a bit risky to kind of take as a buying area, right? Let's see. 4-hour wise, probably looking at probably that level. Let's go down to one lower time frame. Yeah. So here would be my next level, right here. Come across. All right, and that coincides with the top, so that's good. All right, so this level right down here, guys, I wouldn't be looking for buys on this one until 106.50, and again, the risk on this one is 106.34, about 11 pips. This could be one of those ones you guys can look at call spreads. Ideally, this is a zone you'd love to hit at 10 o'clock reversal, U.S. open, U.S. close, and this one may be a U.S. close-based trade. Again, potentially in an overnight. We've had so much movement in this one. Again, we tend to see that retrace after hours when the Japanese market comes online. So this could actually be an overnight long. If you guys are familiar with the overnight trend trader that I wrote, this is kind of setting up for a little bit of an opportunity over there. So 106.50, 106.34. Now dollar Swiss is punched down to a zone that we're looking for. Now there's actually a pretty big zone down here, right? On the lower time frame, again, on the overlay, you can see we are pretty deep into a 4-hour zone right now. I also do expect this one to retrace. This is a lot of movement. This is 63 pips in 3 hours. Daily ATR is 54. So it's done its entire day's worth of movement in 3 hours. And again, based off of, we're going to create more stimulus, meaning the economy is horrible, which again is lowering the dollar. This is a very, very large zone on the daily. Okay, pulling some data from this is going to be a bit difficult, finding a high quality level. And again, another reason why Nadex is great for this. Now, zone is pretty big. Let me see if I can drop this one down. We're looking in this range for a good entry. We'll drop down to an hourly. Let's see. Come back. Let's shrink this. Actually, let me start over here. Let's see. Oops. I was in that zone and we kind of messed with it. All right, let's see. It's got a lot of wicks in it. All right, so based off the 4-hour, that's a huge zone. It's huge. Let's see. We're going to shrink this into this range. Let's drop this one down again. Hopefully we can see it. Yes. Our risk down this one. God, it's a huge zone. So yeah, another news-based trade. Again, if you guys are wondering, this is actually back to that March 9th. This was kind of the start of the whole kind of coronavirus market craziness. So it's a big level. It's a big level. All right, so the way we're going to have to play this one, because we are flirting with a level that is going to be way too big to put a good level of risk on there, is, again, this is the 30-minute chart. We're going to have to wait for a failure to go lower. So what that pattern is going to look like for you guys is something very similar to this. You guys see this where we had a push high? It's going to be a push low, a pullback down. In this case, it will be a pullback up, and then it's going to be a retest, something along those very similar lines. But this pattern right here is what you're going to be looking for right here. And again, it could happen here. It could happen lower. So again, we need this pattern flipped down over here is what you're looking for. Again, failure to go lower inside of what we already know is both a 30-minute, an hourly, a 4-hour, and a daily zone based off of the original coronavirus kind of frenzy in March 9th. All right, so that's going to be dollar SWIFT. Now, switching to gold. Bum, 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 bum. Gold is spiking. Why is gold spiking? Obviously, the talk of stimulus. Okay, and again, I mentioned this before. This was a level they were looking for. Where chart school was, where the Nadex kind of presentation was last week, we talked about entries right here, guys, right? We had seen a huge push. Here's where we were. Here was your entry last week, and bam, all the way back down, and it went past our 1 to 3. We also, off of that same entry, if you guys, again, this is that kind of same pattern. Here was another entry down. Here was another entry back down again, and here was kind of a front run. Now, it has been hit multiple times. We knew it was going to fail, but I just wanted to update you guys based off of where we were last week to where we are now. So let me drag this all the way across and put it all the way up here. Oops. Hold on. I gotta make sure I get the center of it. There we go. Now, huge spike up. We don't know what the stimulus looks like. This kind of looks like a couple other charts. Here's gold, guys. What does the Aussie chart look like? I'm going to switch back to the Aussie chart. Boom. Does it look the same way? Again, this is that proxy that we talk about all the time, that the Australian dollar currency pair is gold. Here's the Aussie. Here's gold. Okay, so kind of the same deal. On the larger time frames, again, long time, right? Look at this. Boom. Straight up. Now, on the daily, there is a level that is starting to kick in above where price is, up here around 1855. Now, can we see that on the lower time frames? The answer is yes, but we do have a little bit more room to run. Will we have enough to get up there? Okay, we're at 41 right now. It's about another $14 higher. Okay, can we move that far? The answer is yes. We've already seen that last week. We saw moves from 118.12 down to 17.93. So we know that it has the ability to move that within a day or two. We are kind of a little bit off from that right now. We could potentially have a kind of failure to go higher front run in this position. But this is one of those cases where we want to wait, because gold and the stimulus word, which again, we've already heard one thing, stimulus by next week. The market is preparing for it, what that stimulus looks like. If we start hearing in the media about stimulus, people will start thinking inflation, and we will be able to get a kick up in this one. The best place to do it is where we've seen sellers step in before. We got about $14 more to go. So 1855 is an area where I'm looking to get short in this position. Again, we'll kind of track this one going into next week, and we'll see. But like I said, this is going to be a big boy for anytime people mention stimulus this week. We're going to continue to see pops, okay? There will be intraday pullbacks. As you can see, there's been some intraday pullbacks in it kind of currently already. But again, until we see a true kind of top on this one, you got to be thinking, hey, we got to be long this position. Now, silver, as I mentioned before, look at silver. It is finally launched, and silver's up to $20. Now, again, this is what silver looks like. As you guys can see, it's up here. There's actually a weekly level that we're running into. And again, I know that the red is hard for some of you guys to see. I'm going to change this off blue because I was using blue so we could find it. And now we're kind of, oops, not a cell limit. Let's change this rectangle properties. Let's go across into pink. Bam, right there. So huge burst up. This one is also really set up for some type of a short. Getting into a position here. Again, what I would do is I recommend dropping this one down to like somewhat of a 30-minute level. And as you can see, this is already having problems. Poked in, pushed away, poked in, pushed away. It made another attempt. And again, that may be the failure to go higher situation. That may be the actual entry of this one. Based off of a daily level, we'll see. Again, I like the setup. I like the fact that right now, again, this is almost a single candle. This is one of those parabolic retracement trades into a daily level that, again, we look to go over. So again, potential trade setup right now if you like silver as we get a collapse below, breaking really $21. Again, taking this one back to 2052, right? Kind of a 50-cent drop in that one. All right. Now, last but not least, let's do the granddaddy of them all over here, the oil trade, and we'll get this one out really fast. We should be done in about a minute here, guys. Oil has had a big day. Now, oil, I had a level at $41 or at $41, and it's a level that I've been all over. I've been just really into it. Unfortunately, this talk of stimulus, man, look at this. I mean, here's that level. We got close. Again, we dinged off it again, but here. 1, 2, 3. And what happened at number 4? And again, we had that basing right below. So remember, levels do not last forever. And I'm actually surprised that this 41.55 actually got blown through. This thing is a monster, okay? Monster, monster, monster. And again, something like oil going crazy, dollar getting weak, it's not surprising that this one took off today. Stimulus is a big deal no matter who you talk to, okay? And again, that's driven, you guys can see the move that we've had really in the last 24 hours or last 12 hours for the most part has been more we've seen in oil besides an inventory report for really the last 2 weeks. So with a big up, I do expect that I push down, and we've already seen it today. We've seen the price kind of run back down again. Couple of areas, obviously, we got to look for. Obviously, a basing level here. We're kind of riding it right now. There is a potential Harry Potter to the downside. Oops, not that one. And when I say that, again, I'm just going to do it crudely on this one. Something along the lines of here, looking for a punch through that level. I know right now it needs to go to about, it's probably about in there. And again, what that would be is a break of this prior level of buyers. It was a good level. I actually really like the level. But as you can see, it popped, it held, went up, retested, popped, came over again. So again, any type of a zigzag, push below, white space, push back up at that 41.75. I do think that could be a short. I actually am a bit more bearish going into the inventory report tomorrow as well. I think that demand is going to probably start to kick in. I don't feel, me personally, that they've made the adjustments. But again, I do believe, again, update number one, governors in the U.S. South clash with local leaders on mask and stay-at-home orders. I do think this is going to start weighing on things as well, the new stay-at-home orders and the new closings. So while it's still up, right, it's up what, 2.45%, it's up $1. What has it done? It's pulled back from 42.46 all the way down to 41.61. So we've lost 80 cents on that rally already. And again, big emotional pop, turning, flipping, and again, be looking for this to kind of come back to the origin of the move back around $41 eventually. All right. So guys, with that said, that completes us for today. Make sure you guys mark off your calendars for Tuesday, July 28th. It will be the last presentation inside of July. And then, man, we get to my birthday month. August party month. And again, August is going to bring virtual openings in schools, which is going to be an entirely another kind of craziness. All right. So with that said, guys, thank you so much. If you guys have any questions with anything I've covered today, you guys can check me out. Take a screenshot of this one right now. You can check me out on YouTube. Twitch is actually, I've been doing 8 to 9 a.m. in the mornings this week. I will continue that through for August as well. Or you can do the old-fashioned method, and a lot of you do it, and I appreciate it. support@keeptradingsimple.com. So I will see you guys next week. Have a very good trading week, guys. Make it great if you can. Make sure you guys cover your risk. A lot of opportunities this week, but again, with opportunity comes risk. Make sure you protect yourself, particularly with those binaries, guys. All right? You guys take care. I'll see you next week.